The stock market can seem intimidating, but it's simpler than you think. It's a place where people buy and sell pieces of companies called stocks. Imagine you own a lemonade stand and decide to sell parts of it to raise money. People who buy those parts become part owners and can profit if your stand does well. When you buy a stock, you're buying a tiny piece of a company. If the company does well, its stock price goes up and you can sell your stock for more money, making a profit. There are two main types of stock markets: the primary market and the secondary market. The primary market is where companies sell their stock to the public for the first time, called an IPO. The secondary market is where investors buy and sell stocks from each other. The New York Stock Exchange and the Nasdaq are examples of stock exchanges where this buying and selling take place. That's the stock market in a nutshell. There are two main ways to make money from stocks: capital appreciation and dividends. Capital appreciation is when you buy a stock and sell it later for a higher price. The second way is through dividends, where some companies share a portion of their profits with shareholders. Dividends are like getting paid rent on your stock. For example, if you own 100 shares of a company that pays a $1 dividend per share every quarter, you receive $100 every 3 months. Not all companies pay dividends. Some reinvest profits to grow faster. Others might pay small dividends or none at all. Both capital appreciation and dividends can be profitable. Understanding these can help you make informed investment decisions. Stock market indexes are like scoreboards for the stock market. They track the performance of a group of stocks, giving you an idea of how the overall market is doing. One of the most well-known indexes is the S&P 500, which tracks 500 large companies in the US. Another popular index is the Dow Jones Industrial Average, DJIA, tracking 30 large companies like Apple and Microsoft. The Nasdaq Composite tracks over 3,000 companies, mostly in the tech sector. By following these indexes, investors get a snapshot of market performance. They can see if the overall market is up or down and which sectors are doing well or poorly. Indexes help investors gauge market trends. They are essential tools for understanding market movements. Section 4. Bull markets, bear markets, and other stock market terms. The stock market has its own language. Let's start with bull and bear markets. A bull market is when the market is going up, like a bull charging forward. Investors are optimistic and stock prices generally rise. A bear market is the opposite, with the market going down like a bear hibernating. Investors are pessimistic and stock prices tend to fall. Another important term is bid and ask prices. The bid price is the highest price someone is willing to pay for a stock, and the ask price is the lowest price someone is willing to sell it for. Market capitalization, or market cap, is the total value of a company's outstanding shares. It's calculated by multiplying the company's share price by the total number of shares. Market cap helps investors understand the size of a company. Knowing these terms can help you navigate the stock market with confidence. Section 5. How to start investing in stocks. Ready to dip your toes into the stock market? Here's a simple guide. First, open a brokerage account. A brokerage account is like a bank account for your investments. You'll need one to buy and sell stocks. Compare fees and features of online brokerage firms to find the right one for you. Next, do your research. Don't just buy any stock you hear about. Research companies that interest you, look at their financials, and understand their competitive landscape. Start small and diversify. Begin with an amount you're comfortable with, even if it's just a small amount each month. Diversify your investments across different companies and industries. Be patient and stay informed. Investing is a long-term game. Don't expect to get rich quick. Ride out the ups and downs of the market. Stay informed about your investments. With these steps, you'll be on your way to successful investing. Section 6. Remember, slow and steady wins the race. Investing in the stock market can be a rewarding way to grow your wealth over time. It's a marathon, not a sprint. Start slow, do your research, and don't be afraid to ask for help from a financial advisor if you need it. The most important thing is to start investing today and let the magic of compounding work its wonders. Even the most successful investors started somewhere. With knowledge and patience, you can achieve your financial goals too. If you found this video helpful, make sure to like, share, and subscribe for more beginner-friendly finance content. Thanks for watching and happy investing.